companies. We are Group 7. And today we're going to talk about the financial analysis for lumber industry and the case study for Interfor Corporation and Western Forest products. Next, please. So today's agenda would start with the introduction. We're going to talk about a little bit of the background of the two companies, financial analysis of Interfor and Corporation, and also the financial analysis for Western Forest products. And then we're going to have a comparison between Interfor West and Western Forest and others players in this industry. And at the end, the conclusion and the references. So now I'll talk a little bit about the two companies. So Interfor Corporation was founded in 1963, and they are headquartered at the moment in Burnaby, British Columbia. The company annual lumber production capacity exceeds 5.2 billion board feet, and they have different types of wood products, and the market they are focused at the moment is United States with 78% and also Canada with 18%. Now talking about Western Forest products, they are founded in 1954. They are headquartered at the moment in Vancouver, also in British Columbia. This company specializes in the manufacture of high quality wood and products, and they engages in sustainable practice. The company has a portfolio focus on value added items, and which include head cedar and specialty lumber tailored for the Japanese market. So their focus would be Canada, United States, Japan, and China. And next, please.
So now we will continue to have a look into the financial analysis of Interfor. Firstly, we take a look at their liquidity. The current ratio was witnessed the decreasing trend since 2021 until 2024, and together with the decline of net working capital amount, showing the decrease in their liquidity in the short term. And for the solvency ratio, we focus on the debt per equity. It's also witnessed the high leverage over the years as a result of their expansion to acquire Atlantic Canada and Eastern Canada in 2022, resulted in higher borrowings during this period. We take a look at the asset management by the total asset turnover ratio. Given the context of the assets expansion, the company show less efficient in sales generation since 2021. It's declined until 2024 and stood at 0.98 times. Now we observe their selling price and whether it's impact to the performance of the profit in the period. And we can see that the selling price now have the significant decline trend, especially since 2022. It dropped from $1,026 per thousand board feet and continues to drop until 2024, and now it just maintain around $610 per thousand board feet. And as a result, the profitability was impacted. As you can see here, the sales and on the profit ratio since 2023 significantly dropped. EBITDA and ROA and ROE turned to negative. That was the causes by the decline of the selling price as a main reason. We consider the market ratio by EPS per share, the earning and loss per share. And with the decrease of the sales and the profit in 2023 and 2024, the EPS was a negative result and reflect for the significant dropping in the profitability to the investor. We understand that the company is in the expansion stage of their life cycle, given that they continue to invest into the fixed asset, the properties in the last period, as well as the acquire of the new company. And the most thing is that the acquisition and the expansion is financed by the borrowings from the loan of the bank. So the the cash flow for the investment and the financing were negative. And we come to the mini conclusion that at the moment we may not consider to invest into Interfor. On it because their trend in decline of the liquidity as well as the increase of their financial leverage and the downtrend of their profit, their sales under the expansion context. Additionally, their product is quite uh, generous in the standard of the softwood lumber, which is their prices is continue to be impacted by the lower market demand and the uncertainty of the economy. Additionally, a potential tariff on the Canadian lumber is to the US, their main market, also could potentially influence to them in the future.
Thank you very much for your analysis. Now let's dive in the Western Forest analysis. For liquidity, we can see that the current ratio has improved from 212 in 2021 to 277 in 2023, and then it slightly decreased to 2.63 in 2024. Now, a ratio that is above 2 means that it's strong and it has a short-term liquidity, meaning that the company can cover short-term obligations. However, net working capital has a slightly declined, suggesting a need of better flow management. Next one, please. Now for solvency. The total debt ratio increased slightly from 0.30 in 2022 to 0.38 in 2024, meaning that the company has taken more debt. Now, the debt equity ratio rose from 0.43 in 2022 to 0.62 in 2024, but remains in a moderate level. This indicates that Western Forest is not overly dependent on debt, making it financially stable compared to the competitors. Next, please. Now, let's talk about selling price. The average selling price per thousand broad feet increased from 1531 in 2021 to 1609 in 2022, but then it dropped significantly to 1329 in 2023. This reflects the impact of market volatility. However, in 2024, prices recovered slightly to 1,390, indicating some stabilization in the market. Let's talk about the next one, please. Now, for profitability. Western Forest profitability declined sharply in 2023 and 2024, mainly due to lower demand and failing selling prices. We can see the FDA margin is significantly smaller. The return of assets, the return of equity, they are both negative, reflecting operating losses. Uh, while the volume remains stable, the lower prices really hurt the profitability overall. And the next one, please. Now, talking about market ratios, the earnings per share dropped from 0.56 in 2021 to 0.19 in 2022, and then it turned negative in 2023 and 2024, going as low as point minus 0.22, and then recover slightly in 2024 with minus 0.10. This means that the lumber prices are volatile. The investors might reconsider in buying or investing in this industry because the prices are really affecting the market. And then for companies' life cycle, uh, Western Forest is also in an expansion phase, meaning that it's investing in growth. However, its operating cash flow is negative, meaning it relies on loans and financing to cover costs. Let's go to the next one. So now we are going to recommend for this scenario to invest in Western Forest due to its strong liquidity, which means financial stable, and then it has a moderate level of debt, making it safer than competitors, and then it has an efficient asset utilization for revenue generation and diversified product portfolio, offering add value lumber products. However, investors should be cautious about the declining profitability and the market volatility.
To provide an overview of our industry performance, we select three other companies in lumber and wood production industry, which are West Fraser Timber, Canfor Corporation, and Stella John. They have the same main market in North America and the same product as lumber and other wood products. And for the benchmark for calculation for industry ratio based on their financial statement in 2023. So both Interfor and Western Forest remain less liquidity at the 2.2 times and 2.77 times compared to industry standard, which current ratio stood at 2.27 times, implied that less liquidity level to repay for the short-term liabilities compared to other peer companies. For the debt ratio, so despite for the total debt ratio were under control, but both the company record for the higher debt equity ratio, which exceed 0.38 times compared to the industry standard, showing the burden of the two companies when they relying on borrowings for the expansion. For the asset management ratio, so in general, two companies have shown the better utilization of asset compared to average asset management ratio of the lumber industry. So you can see here for the inventory turnover and total asset turnover, both companies have the higher ratio. And for the sale performance and profitable criteria. So for the North American lumber market over the near term, I expect to be volatile as the company continue to adjust to changing monetary policy, labor shortage, and political uncertainty. And as industry-wide lumber production continue to adjust to match the demand. So as the result, Interfor and Western Forest have experienced the slowdown in production volume, given the downturn of average selling price since 2021 to 2024. So therefore, the profitable of the two companies was significant decrease, so especially in 2023 to 2024. However, the other company in lumber industry record the better performance. So we see here they have the positive profitability compares with the Interfor and Western, they have the negative. So, but you need to note that the peer achieved positive profit due to their diverse wood product portfolio, so which were less affected by the lower market demand than industry lumber in the terms of pricing. So Thais will give us the conclusion.
Thank you, Korean. To conclude, while both Interfor Corporation and Western Farm Products face challenges related to the market volatility and declining lumber prices, our financial analysis suggests that at the moment, Western Forest Products is the superior investment choice because the company demonstrates stronger liquidity and lower financial leverage, and they also excels in efficient asset management, and they offers value-added products that differentiate them from the competitors. And additionally, Western Forest strategic focus on specialty markets like cedar and Japan specialty lumber enhances their profitability and reduces risk of exposure. Investing in Western Forest aligns also more with sustainable and resilient growth strategies. So at the moment, they would be the more attractive option for long-term returns. in the lumber industry. So would be that. Thank you very much for your attention.